Hey everybody, in today's video, we're going to talk a little bit about the DSCR loan. If you watched our previous video on the 5 sources of money, one of those sources we discussed was DSCR. If you want more content like this, then please give us a thumbs up and subscribe below. Okay, so welcome back. DSCR, bunch of letters. I get it. It's confusing. It stands for Debt Service Coverage Ratio. The debt service coverage ratio is designed for you to be able to get an investment property to actually make some money. So what they're looking at is how much money is this business, whether it's a long-term rental or a short-term rental, gonna generate? How much of that revenue will cover the debt service on it? So that's what a DSCR loan is in a nutshell. However, you're going to find different iterations of this type of loan. So let's discuss the 3 types that you will commonly find. Number 1, it's going to be the conventional DSCR loan. Now that's a little bit of a misnomer, and I coined that phrase. It's not really called that, but the reason I call that is you would go to one of our preferred lenders like Southeast Mortgage, and they would be able to qualify you for one of these. And so here's some of the key differences on the DSCR conventional versus the others. First thing you're going to have is it has to be a personal guarantee, which means they're going to base it on your personal credit. Number 2, it actually will be a 30-year loan, meaning it'll have a 30-year amortization schedule, and it will actually have the note due in 30 years. And as a result of this, you actually need to have a slightly higher credit score than you normally would for a regular loan that would be owner occupied. So those are a couple of the things that you're gonna run into with what I coined as a conventional DSCR loan. The second kind of DSCR loan is really a commercial loan. It's treated exactly like a commercial loan. These are usually done by local banks. So if you go down to your local branch of a small local bank and they actually have a stomach to invest in the real estate industry, some banks have too much portfolio in one sector of business and they'll basically won't do it. So this won't work across the board. But let's say you find one that is investing in this. What you will find is that the loan will be based on more of a 20 or 25-year amortization schedule, but it will have a 3 to 5 year balloon, meaning every 3 to 5 years you have to re-qualify for the loan and get it again. What they're going to track is the profitability of the property, what you estimated it was going to make versus what it really made, and then make a decision on this. Of course, interest rates are going to be a little bit higher, and you're not locked into that same interest rate for longer than that 3 to 5 year term. With these local banks, they also will be looking for a personal guarantee, so it's similar to the first one. Now let's talk about the third one. Number 3, a true DSCR loan also is going to have a 20 to 25-year amortization schedule. However, it's not going to be based on your personal credit. This will be based on your experience level, meaning if you're using this type of loan for short-term rentals like Airbnbs, the bank may want to see that you already have 1, 2, or 3 of these things, or that you're in the real estate industry and a professional in it so that they can truly invest and know that the security is in there based on experience. It won't tie to your personal credit in many cases. This is subject to change, and it also is subject to the risk threshold. Some of them will have different multipliers of what they would like to see coming in versus going out. For example, 1.7 times the payment coming in revenue. So they know there's enough money to not only cover the debt service, but there's to make enough profit to keep you as an investor actually interested in the project and moving forward with it. So those are the 3 different kinds of DSCR loans. Again, if you're interested in more information like this, please subscribe below and check out our other video on the 5 types of money. Thanks so much.